So you're a trader. You walk around, you tell your friends, your reputation, your personality is, I am a trader. Well, if you want to be a trader, there's a lot of things you need to achieve. And I'm not talking about just payouts and being a full-time trader, because you can have people that have had payouts or people that are full-time traders that do not fit a quality definition of what a true professional trader is. So I'm here to basically give some honest, brutal truth on what it really takes to be a truly profitable trader and what that actually means. And the reason I want to make this video is because I want you to take away some real lessons, some things that I want you to have as mindset shifts so that you can really have a true North Star, a target, a reality of what a trader truly is, as opposed to the flimsy approaches based on the flimsy things you see online. And again, the worst thing you want to do is consider yourself a great trader just because you got that tick box of, I have a funded account. First of all, this idea of win rate. Now, you could probably very easily see that as a level of performance, meaning to say the better you are as a trader, the better your win rate should be. And that's a very introductory way of thinking as a trader. Think of it as someone that goes to the gym. The stronger their bench press becomes, the more you can consider them a better lifter. However, the same does not apply in trading. A better win rate does not mean better trader. And in fact, the person with the highest win rate usually does not have the highest profitability. So I want to scrap this idea of win rate and rather focus on precision. Now, precision is something a lot of people overlook. They'll just say, hey, let me enter on a trade, give it breathing room and let the trade play out. This whole set and forget mindset. Well, that means basically you don't know when the market is going to turn and you don't know where the market is going to turn. You just know it should turn at some point somewhere around here, and you throw on a 50 pip stop loss. And that brings me on to the idea of, if you cannot see the liquidity, you are the liquidity. The market structure is great. SMC, well, it's all right. Trend lines, Fibonacci, patterns, harmonics, indicators, all of these ways of looking at the market, sure, you can use that, but they are all what? They are all correlations. The market does not reverse because of a Fibonacci. It happens to reverse around Fibonacci levels. The market does not reverse because of a head and shoulder pattern, because of a support and resistance. It just so happens to reverse around there. That is correlation. But the brutal truth is the market reverses because of causations. What causes the market to move is a few factors. Number one being liquidity. Now, if you find yourself adding a 30 pip stop loss or a 50 pip stop loss to factor in a zone, what are you factoring in really? You're factoring in stop loss hunts. You have a zone, you add a bit of a buffer because you're not quite sure. So therefore you don't know when the market is reversing. If you don't know where these liquidity hunts happen and how these liquidity hunts happen and what time these liquidity hunts happen, well, you're trading blind. And my advice to you as a trader to another trader, if you can optimize your strategy as a beginner, as an intermediate, as an expert, if you can boil it down to understanding liquidity at its core, you can trade any strategy and implement liquidity on top, and it will always be better. And just to reiterate, I've been trading for almost a decade. I found profitability when I started to do swing trading with a bit of SMC, market structure, and lower time frame confirmations. But I got greatly profitable when I started to introduce intra-session mastery, daily cycle understanding, and liquidity. And I went from a swing trader all the way down to an intra-session trader. Why? Because I needed to understand liquidity pools and movements between liquidity pools. These are usually aligned with your average session volatility, average daily volatility. So where do I have my take profit levels? Right there. Average session volatility, average daily volatility. And if you remember the documentation I've done for most of this year, 2024, I've been calling my trades live ahead of time. You've seen it now. Every single entry, stop loss, take profit level, full explanation, called ahead of time with the full outcome documented. I've shown the Broker Sync journal, I've shown the MyFX book, I've shown the live call out for most of this year. What have you seen? Over 55% gain. More importantly, what did you notice? All of these trades utilized liquidity. Maybe you could say, hey, Wakar took that trade because of that supply zone. Maybe so. Hey, Wakar took that trade because it was a pro trend trade. Maybe so. Hey, Wakar entered around that Fibonacci level. Maybe so. These are all your correlation based lenses. You've put the glasses of correlation based on a correlated strategy, and I'm taking those glasses off and recommended you put on the glasses of causation. Every single one of those trades, if you backtest them, if you look at it with the lens of liquidity, the causation, the primary drivers of the market, every single one of my trades, wins and losses that led to great profitability was because of liquidity. Now, to give you some advice that you can take home with you today, I want you to take a piece of paper, write this down and put it right behind your trading monitor. If I cannot see the liquidity, I am the liquidity. This will force you into thinking in a way of, where is everybody's stop losses going to be? Hey, everyone can see that supply zone. Everyone can see that order block. Everyone can pull a 61.8 Fibonacci level. So everyone's going to have stop losses around there. If you can see a very clear trend line, so can the rest of the world. That's where the stop losses are. The more you can start to understand how every trader thinks, the more you start to understand where they're going to be entering and where their stop losses are going to be. And when you start to look at the market from a macro, from everybody's psychology, behavior, and nature in line with major strategies, you will start to see when price is moving towards a destination, A to B, price is going bullish, you'll start to see whose liquidity is inviting in and whose liquidity is it taking out. For example, if you have a trend line, when you see a bearish trend line, 1 touch, 2 touch, 3 touch, when you're arriving on that 3rd touch, people are going to be selling on that bearish trend line. Now, if price goes higher, what happens? You take out those stop losses of those bearish trend line traders. But what also happens? You see that bearish trend line, you see a bullish break. Now, buyers are interested for that break, test, and bullish continuation. Now, if price just melts now, what happens there? Not only did you take out the sellers that were selling on that bearish trend line too early, you also invited in buyers into the market and also took them out. That is an inducement. Inviting people in and taking them out and taking liquidity, seeking liquidity and destroying liquidity. That's how the market maneuvers. So you have 2 choices to make here. You can either be the trader that is going to say, let me add on a 30 pip stop loss, let me give it some breathing room and allow it to play for the rest of the week. Now, what have you done? You've ruined your risk reward profile. You don't know when the trade is going to pivot. You don't know how long it's going to take for trade to reach your destination because you haven't understood liquidity. Rather, if you know when it's going to reverse, you time it, you wait for the inducement, you wait for confirmation, you wait for that session volatility, and you enter and exit very sharp, very precise, with a better risk reward, therefore a better return on investment, and more importantly, with precision. Now, how can you have psychology problems if you're not sitting a week in drawdown? How can you have greed problems when you're able to take a trade most days and hit a 1 to 3 or 1 to 10 within a session? These things are powerful, which is why precision, in my opinion, unlocks so many more doors than just having a high win rate. Precision will take care of a lot of your psychology problems. Precision will unlock a higher risk reward profile, which will satiate any greed and FOMO. If you are a trader that is sporadic and doesn't have a full strategy, liquidity will give you correct direction. If you are a trader that has a large stop loss, understanding liquidity will reduce that stop loss. If you are a trader that ends up sitting hours in drawdown, let alone days and weeks like some swing traders, you can time the market, know exactly when and where through understanding liquidity. Think of the mental peace that can give you. Think of the clarity that can give you, and think of the longevity that can give you, because you're not getting burnt out through burdensome periods and heavy psychology of hitting long durations of drawdown and all the emotional burdens that can come with that. And also with a lower risk reward profile, the emotions that come out when you go through a losing streak. Whereas if you have a high risk reward, well, you know that one win might cover 5, 6, 7 of your losses. Think of the mental clarity that can give you. Also think of the instant feedback loop you can have as a newcomer in the market. You want to be taking a lot of trades, so you make a lot of mistakes and you learn quickly. I don't think you'll make profit in your first year, just the harsh truth. But rather than you trying to become a millionaire in your first year, you actually come in and say, hey, I've got this $3,000. I'm going to spend 1 year using that $3,000 on good education, and I'm going to be utilizing that on some prop firm accounts. Let's say the 50K challenge accounts. I can buy multiple accounts with that budget, and I can make multiple mistakes and learn quickly and not blow my whole life savings. And if you can trade once a week, heck, once a day, you have hundreds of chances in a year to learn, get that instant feedback loop, know where to navigate, know where you're going wrong, know how your emotions sit, know what kind of psychology and temperament you have. This is how you really learn. You learn from the market. You don't learn from textbooks. You don't learn from theory. You don't learn from lectures. You learn from application, implementation, and live trading. That's the only way you get real experience, real tangible emotions, and a real reflection of yourself and your strategy. So therefore, if you are a trader and you're looking to really accelerate your growth, you need to be taking trades more often, because you will learn faster. So therefore, if you can take a trade and be in and out within the same day, and it's still sensible trading, you're going to be learning much faster because you're getting your outcome and result much faster. And as you go on in your trading, my whole slogan, this whole channel, the channel banner, what does it say? A restricted trader is a profitable trader. You need to take trades that are high probability, that are precise, but mostly you need to have quality data-driven restrictions in there. Those restrictions that force you to take trades only when it is prime. And those restrictions are not just random EMAs, random Fibonacci's. No, it is data-backed and it's primary drivers causing the market to move. When you have this kind of setup, you'll be always a stronger trader because you are correctly approaching the market, and this will always lead downstream always to better outcomes because you are taking things with a strong foundation. And I think that is essential. And it's brutally honest truth. Another brutally honest advice is you suck. The reality is, if you're within your first 3 years of trading, and even if you've been trading longer, to be honest, you suck. And I'm not saying that to be egotistical over you or have any arrogance. I'm simply saying, if you are a trader and you can remind yourself you suck, and you continually remind yourself that, it's an important way to talk to yourself. But in the market, a lot of things can happen to falsely inflate an ego. You spend your first 2 months in trading, you do the evaluations, you happen to get funded based on a whim, based on 1 or 2 home run trades. You've now got this false sense of identity that you are this great profitable trader because you have a certificate you can show your friends and family that you are a funded trader and you have a 100K account. That is a false identity that will give you overconfidence, you'll become overzealous, and you'll lose that account just as quickly as you got it. Reminding yourself you suck is important because it will instill a forever student mindset. It will instill an approach that the market is always right and the market can humble you at any point. And the moment you try to impose your opinions, your beliefs, forcing the market to do something, the stronger the affirmation, the stronger the belief, the bigger the fall. The bigger the emotion of a come down, the bigger of a calamity it is to lose a funded account or have a losing period of 5 trades. If you can come to the market and remind yourself, I am forever a student, not that I've got this strategy now, I did this course and I know what I'm doing because I have 5 wins and I got funded. You have to remind yourself this is a long process. Typically speaking, who was a trader? Trading was accessible just a couple generations ago to the elite, the most wealthy people on earth that had tens of millions of dollars. They employed a family office and had traders taking investments on their behalf. Now fast forward, we can execute trades on our phone with demo accounts. Do you not see how everything has changed from dealing desks and professionals and license and regulation to any 18-year-old on their phone from any country with a Wi-Fi? The skill set has not changed. The market has not changed. The access has changed, and that low barrier to entry, sprinkled with the dreams and the facade and the smoke and mirrors of social media influencers, making things seem glamorous and easy, it creates this juxtaposition of selling a dream. It looks like it's really easy, but the skill set is just as hard as it's ever been. They say trading 90% of traders lose, and that makes you think that no one's going to make it. Well, the reality is, everything has that stat. How many people that want to be a doctor end up qualifying with how hard it is to get the grades at university? How many people want to be a basketball player in the NBA but never make it? How many top Premier League football players are there compared to how many people in high school that dream of that? Everything in life is hard to achieve. Everything in life that is worthwhile has a 90% losing streak. The only difference is what? You have to be correctly qualified to apply to med school. You have to have years and years, the majority of life, training with specific coaches to be scouted to be a football player or a basketball player. Everything has barriers to entry except trading. Because you can get in right away, it's so cheap, it's so easy to just load up an account. It makes us feel like this thing is easy. But this thing really, it takes just as long as a degree. You should be looking at the markets from, I need to spend 5 years before I should really be taking this as a full-time career. And that might seem a bit absurd, but well, how long does it take to graduate any degree? 3+ years. How long does it take to become a doctor? 5+ years. For me to become a dentist, 6 years of university with a controlled simulated environment of labs, patient with a professor overseeing all of these controlled scenarios before I could even get a job. So what makes you think in your first 6 months of trading, you can think about quitting your job and being this full-time trader because you got a funded account? You have to realign your reality of what the market is. It's the hardest industry in the world. It's zero sum. It's player versus player. Money is not created nor destroyed. It goes from hand to hand, from the uninformed to the informed, from the impatient to the patient. If you don't know what you're doing, you'll get burnt in this market, and you'll get burnt with a sky-high ego. That's the crazy part, because you get false sense of security from weird mentors and weird certificates, and this is all wrong. I need you all to humble yourself with myself and remind ourselves we have to be a student in the game, because we are up against institutions that invest billions of dollars in AI, tech, and staff to have a competitive edge. We need to be on top of our game mentally and strategically, with a great technical capacity and also great mental resilience to be stoic, calm, and collected, but always ready to react to what the market presents us. These traits, these skills take years to develop. And if you want to develop that, the number one component to be a successful trader is time. You can have great mentors, great education, natural talent, hard work ethic, a little bit of luck, but all of this is useless if you don't give it time. That's why the formula I give is that those things, all of those multiplied by time. Time is the best factor, and how can you survive long in this game? If you really want to hack your way to be a trader, a profitable trader, you need to have time on your side. How can you have as much time on your side? Well, you have to understand, why do people give up? People don't give up because they ran out of money. People that are really into trading, they will go back to a job, they'll save up, and they'll come back to buy a new account. They give up on trading because they run out of hope. That's the harsh reality. 90% of traders that are watching this video in 5 years will not be trading, not because they're broke, not because you can't do it anymore, not because you don't have the time. It's because you ran out of hope. So you have to understand, what am I doing day to day? What behaviors do I have that are detrimental for myself because they're going to cut my longevity in the market and they're going to make me end up losing hope? It's going to be things like running from signal group to signal group, looking for a handout, and a copy paste system so you can learn while you earn. What a cheap mindset to have, what an inefficient mindset to have. And I want you to have some pride. I want you to take this seriously. I want you to have passion and pride in what you do to become a self-sufficient, independent trader, not reliant on someone. Number two, if you're bouncing from mentorship to mentorship of people only flaunting lifestyle with no results, why learn from them? Stop feeding their lifestyle. If you keep blowing challenge after challenge and spend your life savings on prop firm accounts and you don't even know your data for your last 100 trades, you haven't even backtested a clearly defined strategy with clear rule sets, a predefined plan that can be backed by data. If you don't know what your strategy is, more importantly, if you can't tell me your exact strategy on a piece of paper listed out and you don't know the data of in the last 1 year or last 100 trades, how often you have a 3 trade losing period, you should know that, because when you face 3 losses in a row, you need to know, okay, in my strategy, this happens twice a year. This is normal. Or if you end up taking 7 losses in a row and your data shows this should never happen, not in the last 1 year, now it's happening, you should know what you did wrong. Is it an emotional decision? Is you not following the edge? If you don't have data, if you don't have clarity, if you don't have a checklist of your strategy, how are you taking this professionally? Yet you keep dumping money into prop firm accounts, thinking it's your golden ticket, your way out, but you don't even have a strategy. So the moment you get that funded account, you're going to lose it because you don't know what you're doing in the first place. The funded account is not your badge of honor to show you are a trader. Everything will converge towards your proven edge. You might have temporary highs and lows by taking a FOMO trade, a gambling, an NFP. You might have some wins, but long term, your results will always be your truth, which is only one thing, your edge. So if you don't even know what your edge is, what are you doing? Why are you dumping money into funded accounts? Going from strategy to strategy, just hopping around, going from uninformed optimism to informed pessimism to the valley of despair and jumping ship. You know that cycle I've spoken about. You think it's going to be easy and glamorous because the strategy looks great. You started out, it's harder than you think. It's not really working out for you. You don't have the resilience to keep going through. You just jump to the other mentor and you keep dumping money in the wrong places. Eventually you'll give up because it's like, I did 10 courses, none of them worked, and now I have to give up on trading. Well, the reality is it wasn't the courses that didn't work. It was you. You didn't have the resilience to see anything out. You didn't have the resilience to backtest 100 trades. Come on, that doesn't take that much time. You need to do things correctly because you're the one that's going to get in your own way. You're the one that's going to create a scenario for yourself where you're so burnt out that you force yourself to give up hope. So put measures in place to stop yourself being in that situation in just a couple of years and giving up on one of the greatest opportunities that exists for us right now. Trading is the ultimate leverage in life. Trading is a great way to be financially free, geographically free, and time freedom. You can have all of these things at your fingertip, but it just takes a couple of years of true commitment and a correct approach. And the last piece of brutally honest advice: prop firms is not your future. I know prop firms are a great opportunity. I know I even spoke about so many times how you can leverage and utilize prop firms. Prop firms are great for now. They're a great tool, they're a great vehicle, but they will not be in your life long term. You need to utilize this prop firm money, this opportunity, because you've seen in the last year how many prop firms have gone bankrupt. How many prop firms that were in the top 5 doing millions of dollars a month in profit collapsing overnight. They have no aligned incentive with you. They are not on your side. They want you to lose. They will have cash flow issues, and more importantly, the founders and owners of these prop firms are neither traders, neither on your side. They are just hungry capitalists looking to make profit in any way that they can in an unregulated space so they can rug pull whenever they want. Why would you depend on that? Why would you create your whole dependence as a human, your whole financial relief on prop firms? No. Leverage them while you can. Exploit them while you can. Maximize the rules that they give you in the ways that I've shown you before with the revolving door strategy, the golden bullet strategy, all these tools and advices I've given you with downloadable resources. Use that. Make as much money as you can in the short term so that you can circle back to your own live account, your own real capital without the loopholes and the restrictions and the risk team that is always out to deny your payout. Don't have that in your life. That is an unnecessary burden. And to be honest, this whole dream of being like taking $100 to becoming a millionaire through prop firms, through live accounts, whatever, it's a facade. I'm here to remind you, a good return is 20% a year. A really good return is 20% a year. Now, if you don't have means of getting capital long term, that is hundreds of thousands of dollars, you will never have the freedom you want, because if you're only trading a 10K account and 20% return a year is good, you'll always struggle. And you don't want to always be relying on prop firms capital. So you need a way to get hundreds of thousands of dollars in a personal account. If you can't command a high salary based on a niche skill, if you can't start a business that will flourish that is cash flow positive, if you can't invest and deploy a personal brand or tech to generate a valuation-based business, your only ticket out is prop firms. But you need to have a specific approach to say, I'm not optimizing to be a professional trader on my prop firms. I'm not looking for the best equity curve on prop firms. I'm looking to get payouts. And you need to therefore have a strategy to lock in payouts consistently and make as much money as you can in a short amount of time to do what? To then not instill bad habits, because prop firms will force you to have bad habits, and you need to not have that long term in your life, because then when you have a live account, you'll bring all of this bad behavior into a real account, and this real account does not have a reset button. This real account, you can't just buy another challenge. That's your money. So you need to utilize prop firms, generate as much money as you can, delete all of the bad habits, and come professionally to a long-term vision on a real live account with the real rules that you need to face, not prop firm simulated environment, rules that are against you. And with that, if you're expecting more than 20% return a year, it's very, very unlikely. The odds are against you, and even if it does happen, it won't be sustainable. So meaning to say, this rags to riches, this glamorous lifestyle is not realistic unless you have a lot of capital or a lot of trading competence or a mix of both. So meaning to say, look for other ventures. Look for people that can open up doors for you in a more professional environment. If you don't know how to end up landing a great job in a hedge fund or a startup or be beside a VC, if you don't have these contacts, find people that have these contacts. My goal, my vision for people that are with me is not, hey, I hope you'll be a millionaire in a couple of years. What I'm looking for people around me is, if I can find the correct skills, traits, and beliefs, instill good trading systems into individuals that are competent, and then when they have shown performance with years with me, I can help them land a job. I can take their track record and go to a hedge fund that I have access to through Titans of Tomorrow, through the network I have. I can help people land great jobs that will have a salary, they'll have capital under management, they'll have a professional, realistic trading environment, not this facade of trading on a beach and everything is easy. If you really want to be a trader, know what a real trader looks like. Know what a realistic path is. You can make a lot of money, yes. And if you're working with a hedge fund and you have a lot of capital under management and you have great performance, you'll be rewarded with your salary plus commission and bonus. So you can make all of your financial goals through this route. But it starts with a correct approach from the beginning, which is utilizing prop firms and maximizing them. Getting a personal account that can sustain an average lifestyle with $100,000 or $200,000 of your own money, leverage from prop firms, trade that sensibly, and try and land a job in a professional institution that can give you a salary and a lot of capital that is not yours, so you can generate performance-based returns. That's a real path. That's a real trader's path, not this whole Lambo lifestyle that you see online. And how many of this Lambo lifestyle online do you see? How many traders do you see doing that? A drop in the ocean. So where are the rest of the people? They're bouncing around from funded accounts, they're losing their money, and majority of people are failing. So why add to that fuel? Why be another number in that statistic? Instead, create your own path, realign a vision, and do things the right way, in a way that actually works, like the one I've just suggested. And my final piece of advice, as you always know, a restricted trader is a profitable trader.